Be Wealthy and Smart, episode 1095.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how mining stocks are reacting to the quantitative easing, or QE, that's happening in London, England. Yes, the Central Bank of England came out and said they were going to start buying their bonds, or in simplistic terms, we call that money printing. But the way they do it is actually to buy back their own bonds. They issue the bonds and they buy them back. And that's how more is created. And essentially what's happening is the debt is being expanded. This is what happened during COVID times. And this is happening again. So what was reported was the Bank of England will carry out temporary purchases of long-dated United Kingdom government bonds from September 28th to restore orderly market conditions, according to a statement. Well, this sent the mining stocks into a tizzy because once you have unlimited funds being created, that's going to do several things. It's going to destroy the purchasing power of a fiat currency because as you have more supply of anything, the value declines. I believe it's also something that's likely to happen in other major currencies, as the lack of liquidity in the markets and the rising of interest rates that has happened so fast is causing margin calls and all kinds of market turbulence. The market turbulence I believe that we're not hearing about is most likely in the derivatives market, where they are most sensitive to interest rate movements. And that market happens to be in the quadrillions of dollars. So there's undercurrents here of things that are happening that are causing uncertainty. And that lack of confidence is when people tend to go toward precious metals and mining stocks. Now, although the Bank of England said this is a temporary measure, I want to remind you that in 1971, President Nixon told us that taking the United States dollar off of the gold standard was also temporary, and yet we're still off of the gold standard 51 years later. Some other comments that I found on Twitter that I thought were particularly appropriate to what is happening right now was one by JC, who said 3 of the top 5 central banks, the Bank of England, People's Bank of China, and Bank of Japan, are now in stimulus and or QE mode, quantitative easing mode, in the face of a rampant global inflation. Time for gold to shine. Rising real yields are catalyzing QE. And he references the symbol GDX, which are the large gold mining stocks, heading back into the $30 range in short order. Well, I don't know about his projection for the dollar range, but I do know that the likely move is higher, with 3 of the 5 top central banks now buying bonds back, being in QE mode. That's loose monetary policy, and that is positive for precious metals. Here's another tweet from Fred Hickey, who said gold, down over $10 before the Bank of England bond buying news, is now up $10. At some point soon, gold will anticipate that the Fed will mimic the Bank of England because all these central bankers will talk and act tough on inflation, the crisis du jour, until a bond market crisis is a bigger problem. I agree with that, and I also believe that this is what is the precursor for a bigger reset of global currencies and their valuations. This is something we've talked about and many people have been talking about for a long time. Another tweet that I liked was retweeted by Zero Hedge, who was quoting Federal Reserve Bank of Atlanta President Raphael Bostic, who said the action of global central banks is not as uncoordinated as some might think. International officials talk often. And another tweet from JC, The Bank of England's shocking inflection from quantitative tightening to unlimited quantitative easing is the catalyst that could result in a sustained and fierce reversal in gold. It's just a matter of time before other central banks follow, resulting in pervasive money printing in the face of elevated inflation. Yeah, that's exactly right. The price of gold and silver has been suppressed, as we've talked about for a long time. This is something that's done with paper contracts of gold and silver that are shorted in the market and keep the prices down. That keeps it from competing with a paper fiat currency, which as long as it's in limited supply will hold its value. But once it gets into unlimited supply, it starts losing its value, which is what we've been going through this year with the increase in inflation. We're feeling the effects of the excess money printing that happened during COVID. So the other thing that JC pointed out is the COMEX silver inventory is down another 1.18 million ounces. At the recent run rate, there won't be an ounce of precious metals left in the vaults in less than a year. That's saying that the markets where physical silver inventory are traded are being scooped up by those in the know who understand that the price of silver has nothing to do today with what the real value of silver is. Silver being so rare, rarer than gold, and needed for electronics, electric vehicles, and solar panels, and computers, and cell phones, things we use every day, and things that are becoming more popular and needed for the future. Because silver goes into electronics, yet it's so rare, and the price has been so depressed artificially, now the people that are purchasing silver for investment and for future gains are basically buying up all the silver that there is. And this is because in our future, there's likely to be some sort of a reset to what the real market value of silver should be. This has been suppressed for more than 40 years. Remember, JP Morgan called gold money and said everything else is credit. And that's right. Money is actually debt. It's borrowed into existence. So dollars and pounds and yen and yuan and euro, they're all borrowed into existence. They're all credit. The real money is, and always has been, gold that it was based on. And now we've seen Russia and the BRICS nations, Brazil, Russia, India, China, South Africa, Saudi Arabia, Turkey, etc. They're adding more countries onto the BRICS alliance. They are getting together and doing away with the US dollar as the currency to trade in, particularly for oil, but also among each other. And they are backing their currencies with gold. So if you have a chance to trade a currency that is backed by something, or receive a currency that's backed by nothing but the paper it's written on, which one has more value? Of course, the one that has some attachment to gold or other commodities or a basket of commodities or whatever they're going to do to fix this monetary problem. Because what's happening right now is the currencies are being inflated into oblivion so that they lose value, inflation goes through the roof, and it's going to create the problem that will result in a financial reset that will bring in the solution. This is all planned. It's been planned. It's my opinion. This is known by the central banks. And as Atlanta Fed President Bostic told us, the action of global central banks is not as uncoordinated as some might think. No, it's not. It is all coordinated. Everything with money must be planned. You can't have anything with money be uncertain. They need to be coordinated to bring in the big change that is about to come upon us. And the best way for you to prepare for that change is to invest in things like silver and I believe XRP for reasons I've been talking about in my book and on the podcast. I believe XRP and the cryptocurrencies that are already following the ISO 20022 regulations for communication amongst each other are the ones that are slated to be the winners in this new financial system, which is exactly why I wrote my book, to let you know all about that and why I believe that's going to happen. What we're seeing right now shouldn't be a surprise to anyone who's been studying this for a period of time. It should only be a surprise to people who really aren't paying attention, or who haven't been studying it, or perhaps refuse to believe exactly what we're being told, that this is part of a larger planned event. So do your own research. I can't give financial advice, but if you'd like to know more, I did write about this in my book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. I put a link to it for you in the show notes. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.